Markets rise, investors optimistic about a new round of stimulus. Lawmakers starting talks at this hour about what the next relief package will look like. This amidst 1.2 million new jobless claims this week. In tech, meantime, Apple leading the charge, hitting another all-time record. Uber, not one of the winners today, just out with earnings that showed the company's making more money delivering food than transporting passengers for the first time ever. Uber shares are down slightly after hours there. Not a great quarter for Uber. I want to bring in our Abigail Doolittle, who's been following all the back and forth. And Abigail, I want to start with Uber. Engagement down 44%. That is the measure of just how many passengers they are transporting. And what they made in food delivery didn't make up for what they lost.
You know, it's an interesting quarter because technically they beat the estimates, which of course have been lowered in a huge way, but revenues fell for the first time ever, so that's not so great. And as you were just mentioning, their primary business of ride sharing, just not there. I see it every day on the streets here in New York. While there's tons of cars out, there are much fewer of the driven cars out there. The demand simply isn't there. For a while, people were afraid of getting into the cars. Now that people are back in the city and moving around, who knows, maybe at least here we'll see a little bit of a pickup. But it is really interesting to see that food did better than ride sharing. And that shows you that these companies are really trying to adapt to this pandemic. Right now, the stock down in the after hours, though, because of the disappointment around ride sharing. T-Mobile, on the other hand, popping. They put up a big quarter. They beat estimates. They also added more than 1 million subscribers. So real, positive note there. And you were mentioning Apple, Emily, on the day. That tech-heavy NASDAQ simply keeps climbing, up 7 days in a row now, record high after record high, yet another record high on the day. It'll be interesting to see, of course, what tomorrow brings. Can it make it to 8 days, especially after that all-important July jobs report?
Right. We also are looking at T-Mobile earnings as well. T-Mobile now has the number 2 spot in mobile carriers, which is huge given, just a few years ago they were in last place, shares spiking there after hours. What are you seeing there?
Yeah, no, it's an impressive quarter that they put up. Not only are they that number 2 after, finally having that merger with Sprint go through, but again, more than 1 million subscribers, which is really very impressive. They beat the number, so investors are liking that. We also had a few other earnings reports after the bell, Emily, including the online TripAdvisors. Not surprisingly, these stocks are higher, and I say not surprisingly. They've had such a tough time this year. Actually, booking at this point is flat. It had been higher earlier, but TripAdvisor is up 3.3%. The estimates have been lowered so much, the expectations so low, it's a little bit less bad, especially some of the commentary coming out during the calls with the management teams saying that the trends are perhaps improving. The big winner, though, in the after hours, Zillow, up 9.9%. That's one of the silver linings of the pandemic, as many folks are looking to really nest in bigger homes. They're embracing online shopping. And on the year, we see this trend, too. The online the online travel agents down on the year. The NASDAQ 100 up solidly, but take a look at Zillow, up 56%. So they're really the haves and the have-nots, the winners and the laggards around the pandemic. And it's clear that investors and traders are rewarding companies that can really adapt to this situation and adapt quickly.
All right, Bloomberg's Abigail Doolittle. Abigail, thanks so much. We'll be back checking in with you tomorrow when we see the impact of that jobs report. Thank you so much for weighing in with us today. Meantime, I want to get back to Uber. The pandemic, as Abigail said, wreaking havoc on Uber's operation. Revenue declining 22% year over year to $2.2 billion, and delivery overtaking ride sharing for the first time in the company's history. I want to bring in Eric Hagstrom, who covers the company for eMarketer. Eric, what are the highlights or the lowlights that you would pull out here today?
Well, the major highlight is that while ride sharing is down significantly year over year, both in terms of revenue and gross bookings, it is starting to recover. In July, gross bookings declined about 50%, and that's compared to about 75% for all of Q2. So there's improvement. And there's improvement, sporadically across various different geographies. And the real, bright spot for Uber is ultimately their Eats or their delivery business, which grew triple digits in this quarter as people were stuck at home, couldn't go to restaurants, and were looking to feed themselves and support local businesses.
That said, given the uncertainty ahead, companies pushing out returns to work till early next year or even longer, the demand for ride sharing isn't going to come back anytime soon. And is food delivery really going to make up for that? It doesn't seem that way.
Well, food delivery can't 100% make up for the loss in rides. But when you do look at the two businesses, they are, they work against each other. So when lockdowns are, imposed, Eats does a little bit better, whereas, when lockdowns are imposed, the rides do pretty horribly, to be honest with you. But we are seeing recovery in many of their main markets in Europe and recovery in some markets in the U.S. Interestingly enough, when we look at food delivery, though, there's a really huge consumer behavior story there where pre-pandemic food delivery was something that, was really a luxury good for people who had, quite frankly, too much money to spend in large cities. Now we're looking at, adoption really increase across many geographies, including in the suburbs, including in people who, maybe wouldn't have considered using this before. So when you look at the picture for 2021, the shift to kind of food delivery through these apps like Uber Eats has really accelerated, and that's a good sign for them moving forward into 2021 in the future.
What do you see for ride sharing longer term? Because there's going to be remaining concerns about being in close quarters with a complete stranger. You have actually positive trends in private car ownership, people wanting to buy cars because they then have their own private method of transportation. Even scooters are doing better than we might have thought because it's open air. It seems like ride sharing then, is last on the list in terms of choices.
Well, I wouldn't consider it last on the list. I would really consider public transportation to be last on the list. And that's how most people in large cities get to work on a day-to-day basis. So when we look at what's been happening with regards to, work from home policies and when, offices eventually open up, a lot of people won't be willing to take, a crowded subway during rush hour. People who do need to get to the office for whatever reason may be more willing to take a ride share and limit the number of people that they get exposed to on a daily basis. But when you look forward to 2021, 2022, we've seen a pretty significant demographic shift of, higher income millennials to the suburbs. And while they are buying cars right now, it's likely that they will have fewer cars per household. And over time, that's a net benefit for Uber and the ride sharing business in general.
Okay, so second to last on the list, just ahead of public transportation. You are right about that. What can Uber do in the meantime? They're building out the food delivery business. They're in the process of acquiring Postmates. What else can they do to buoy the rest of the business and, essentially diversify while we are in this time?
Well, first off, online grocery is a massive opportunity. There are a few major players in the space, in Instacart and Amazon. But when you look at overall, e-commerce penetration of total grocery retail, it's next to nothing. So there's a lot of room for them to grow, especially as the pandemic has changed behaviors and made, online grocery delivery viable for many people for the first time. So that's a really interesting area that they're investing in. If you noticed in their financial statements, they changed what used to be called the Eat segment to the delivery segment. So they're really making some important investments in the space, and I would expect that online grocery is a really interesting growth area for them, especially as it will allow them to partner with some major regional chains. Grocery in the United States is highly regional, and people are very, very loyal to their local chain. So if Uber can potentially partner with these local companies, they do have an edge over more national retailers like Amazon's Whole Foods.
All right, interesting. We will be watching for that. Eric Hagstrom of eMarketer. Eric, always good to have your commentary here on the show. Thanks so much for stopping by. All right, the booming gaming industry, meantime, is making a big comeback among the pandemic and the changes in transportation. We will talk to one CEO who is navigating that with a big gaming acquisition next. This is Bloomberg. COVID-19 has had a major impact on businesses around the world, but some sectors continuing to gain as a result of more time spent inside. The gaming industry has seen a sharp rise in customers amid lockdowns around the globe, and in particular, mobile gaming. That includes Zynga, just reporting earnings yesterday, beating expectations across the board. Frank Gibeau, the CEO of Zynga, joins us now. Frank, Zynga achieved highest ever quarterly revenue and bookings, best operating cash flow in 8 years. Is that all driven by the pandemic?
Well, it's certainly had a major impact, but if you look at our growth rate before everyone started sheltering in place, we were running at a pretty good clip. But as the world took measures to protect themselves and shelter at home, frankly, when you're social distancing and you can't be with someone, the next best thing to do is to play a game with them. And so we saw huge jumps in engagement, audience, and frankly, it was really amazing to see was the socialization that was happening in games. We had some products that saw a 400% increase in chatting, gifting, and sharing. So, games are really starting to become their own social networks. It's a really exciting time for us from the standpoint of keeping up with demand. Our teams have all transitioned to a work from home environment. And fortunately, we haven't missed a beat there. The teams have really kept up with the pace required.
So what does this all mean for your outlook for the coming quarter and the rest of the year, given that it looks like lockdowns are going to continue? We're still in quarantine. I'm still doing the show from home. Is that more good times for you?
Well, I think the issue for us is as we look into the second half, there's a lot of economic dislocation. There's the potential for more shelter in place orders and how COVID operates. What's positive for our company is that we make free to play mobile games, which are very resilient in tough times. And frankly, the work that we do has never been more important. The fact that we get to entertain people while times are tough is just our small part in trying to make things better. But as you look into the second half, we felt confident enough in the business to actually raise the year. We started the year with a guide of around 1.75 billion, and now we're guiding to achieve 2.2 billion for the full year. So we're feeling good about our trends.
Now, my kids are doing some more gaming. They're still quite young, but they are, as a result of the times, that is what they are enjoying. What is some advice for parents about how we can make this time productive? Because we want the games to be more than entertaining. We want them to actually be learning and their brains to be developing. And I wonder how games can be part of that and how we prevent things like addiction from happening.
Well, look, moderation is the key. It's somewhat ironic at times at home with my 3 teenagers when their dad tells them to stop playing games, and that's my living. But, it is really keeping everything in balance. And what's great about now is that there's so many multiplayer games and games that are very social. It's a great way for kids to hang out and keep that social development going, whether it's in Roblox or in Words with Friends or any number of the games out there. The ability for them to get onto a game, to play together, to communicate, to keep each other up to date, and frankly, to have some fun, that in moderation, that can be a really healthy thing.
Google and Apple have been working to increase their position in the gaming industry, and I'm curious what your thoughts are on that, given the antitrust scrutiny.
Well, look, I think if you look at mobile specifically, it's Android and Apple have created an amazing platform that's just reaching over 2.5 billion customers worldwide, and they handle a lot of infrastructure issues like billing and connection and other things. At the same time, they are starting to build out some of their services as it relates to subscription games and things like that. And while it is sometimes disconcerting to see your platform partner create a game to compete against, I do think it keeps the ecosystem healthy, having that level of competition. We really focus in on bringing the best games to bear for our players, and competition keeps you sharp, and it keeps more choice available for players. So we work with Apple and Google in a very productive way. It's a very collaborative relationship. They ask a lot of questions of their developers in terms of things that are working or not working, and we try and improve the overall ecosystem so we can both win together.
What about other platforms like TikTok for expansion? Are you looking at TikTok in the midst of the controversy?
Not TikTok in specifically, but this quarter we did extend our partnership with Snap. We launched another game there, and we'll be launching more games in the future. And we actually launched our first Amazon Alexa game called Letter Pop, where it's a purely verbal game that you can play at home with Alexa. So we are experimenting on other platforms. Really, if you look at the overall gaming business over the last few years and how it's grown, it's all about new platforms and reaching new players. So we're excited to see a lot of new things coming on in the future, like new AR platforms, more chat-based platforms like Snap. And if TikTok gets into a position where it understands its future better, perhaps it could be a gaming platform as well.
You also just acquired a Turkish gaming company, Rollic, in the ultra-casual game space. What are ultra-casual games, and why do you want to expand there? Sounds like those could be more my speed.
Yeah, they're called hyper casual, ultra casual. They really are basically universal ideas that appeal to the mass market. It's like untying a knot or doing some kind of little puzzle. They're instantly playable. They're usually driven by the advertising business model, so they're very accessible to people, and they don't last for very long. You play them in short bursts and short sessions, but what they do is generate massive audiences. Rollic is an Istanbul-based company that has had over 250 million installations of its games. It produces some number 1 and number 2 hyper casual games on the App Store. And in fact, their total audience base is 63 million MAUs, which adds nicely to Zynga's base network. So when we see what they build and how it fits with what we build, there's a really nice connection between the two. They can acquire users very cheaply for us in terms of how people come into the games. We can expose them to other games like Empires and Puzzles, Merge Dragons, and Words with Friends. So as we look at this next chapter of growth for our company and frankly for the mobile industry, audience scale and a scalable network is going to be increasingly important.
All right, Frank Gibeau, CEO of Zynga, always good to have you here on the show. Thank you so much for stopping by. All right, coming up, could Microsoft be looking to buy more than just TikTok's US operations? Perhaps all of the company instead? We'll discuss next. This is Bloomberg. Microsoft is reportedly chasing a deal to buy TikTok's all of its global operations, not just its operations in the United States. This according to the Financial Times. Microsoft is also said to have discussed an agreement to allow it to have a full year to separate TikTok from its parent company, ByteDance. For more, I want to bring in Bloomberg's Kurt Wagner, who's been covering this story. Kurt, what's your take on this FT report?
Well, we spoke with sources this morning and actually got some pushback on this idea. What we were told was that the two sides are still discussing what Microsoft had announced over the weekend, which was that the company is looking to buy the U.S. operations in addition to TikTok in Australia, Canada, and New Zealand. I think it makes a lot of sense for Microsoft to be interested in TikTok globally.
Sounds like we lost Kurt Wagner there. Kurt talking about Microsoft's continued talks with TikTok to buy its U.S. operations. The Financial Times has reported that Microsoft is considering buying all of TikTok's operations, but as Kurt mentioned there, they're getting some pushback on that. Meantime, we're going to go to a conversation we had earlier today on Bloomberg Television with the CEO of Sonos. Take a listen.
We were diversifying our supply chain really to address the tariff issues that existed. I mean, we've had a plan for a long time to diversify, but we accelerated that given the tariffs. And I think the good news on that front that we let investors know yesterday is that we've actually been given an exemption for the tariffs that we have paid since they went into effect last September. So that's actually going to be something that flows to our bottom line, which is great news. And Malaysia obviously was impacted by the pandemic, and so they shut down some of the operations there, which has slowed our push into Malaysia, but ultimately we'll be there and up and running fully by mid-2021. Our original goal had been later this year, but we'll be in good shape by mid-2021 by the looks of it right now.
Talk to us about the patent debate, fight, whatever you want to call it, with Google. The US International Trade Commission is looking into it at the moment. Are you confident that you can start to get royalties from Google in the back of this?
We're very confident. We've just, last week, we signed our second agreement with a competitor that is now paying us a royalty. We're 2 for 2 on that front. Google is our third, and we're very confident in terms of where we stand, and we're very pleased that that trial is just around the corner. So we'll see that in February. So we're feeling good about that. And look, we're trying to stand up for all small, innovative, entrepreneurial companies that exist in the face of companies that are willing to try and efficiently infringe on others' inventions and intellectual property. So we feel it's the right thing to do for our people that invented this, all of us, and for our investors.
Yeah, that's a big issue there. I am curious, though, what the future holds. I mean, you guys were pretty early to sort of this home connected speaker market, and you really grabbed a lot of share of that. I compliment you on the product placement right there over your shoulder there. But is this always going to be just a home product? Are there plans to maybe do something beyond the home, whether it's portability or autos, what?
Yeah, so there's a couple of different things there. I mean, you've seen that we've expanded a partnership with IKEA as well. So we've collaborated with them on new products that take us into new price points, new countries, new form factors. We recently brought out the Move that you see here, which does allow you to go outside, right? And it's our first product that allows you to leave the home and is portable. And so you can imagine we see a ton of opportunity.
Patrick Spence there, the CEO of Sonos. Coming up, we're going to have more of Bloomberg Technology. We're going to be talking Facebook. Finally, taking down a post by President Trump. We'll tell you why the social network intervened. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. Both Twitter and Facebook blocked accounts related to President Trump after they shared a video of a Fox News clip in which the president claimed that children are almost immune to COVID-19. That is false. Children are not immune to COVID-19. This is the first time that Facebook has taken a direct stand on one of the president's posts. I want to bring in Sarah Fryer, who, of course, covers Facebook for us. Sarah, tell us what exactly happened here.
So Facebook has really tried to draw a line in the sand when it comes to coronavirus misinfo. We've seen a lot of back and forth with Facebook over whether Trump's posts violate other policies like inciting violence or misinformation about the vote. But in this case, Facebook was confident to take a stand. And I think part of what it's a good reminder of is that these tech companies feel that if they align with what the World Health Organization and what the CDC and what epidemiologists are saying about coronavirus, they can say that the misinformation about it contributes to world harm and they can take it down. Whereas if they were to take a similar action on a post with anything to do with politics, they wouldn't be able to make that argument and could be accused of bias.
Now, in response to this, Tim Murtaugh of the Trump campaign tweeted, "Silicon Valley is hopelessly biased against the president and only enforces the rules in one direction," despite the fact that Facebook has actually been more lenient on the president's posts than other tech platforms. Talk to us about how this fits into the broader Facebook narrative. Of course, the big controversy has been Facebook not taking a stand on political speech, not taking a stand on political advertising. Do you sense that any of that has changed, or this is simply because of their rule on COVID misinformation?
Well, Murtaugh's saying that because he knows that's exactly the kind of thing that Facebook fears. And they don't want the Republicans to call them out as biased. In fact, so many of their policies are tailored around trying to protect the company from that risk, because Trump is in a position where he could take regulatory action against Facebook at any time. We're seeing that right now with TikTok. If there's a platform he decides he doesn't like, he can bring down the hammer. And so I think that these claims of bias, although they have no basis in fact, continue to keep Facebook appeasing not just the president, but a lot of other Republican leaders or some more extreme news organizations like Breitbart. I think that this is just a constant dance they have where they're trying to make sure that they don't increase their risk of regulatory retaliation.
Meantime, also today, Facebook banning advertising from a pro-Trump super PAC, the Committee to Defend the President. No word on how long the ban will last. What do you make of that?
I think that they're trying to show that they are going to take aim at things that are, either coordinated inauthentic behavior or coronavirus misinformation, and that's what they consistently say to the media is like, we are banning things based on their behavior per our policies, not for their political leaning, not for who they're connected to. So they're going to try their best to frame this as a decision that has nothing to do with Trump and everything to do with these entities doing a violation on their platform.
Meantime, Facebook has also announced today that they removed hundreds of accounts tied to inauthentic behavior, some of that politically inauthentic behavior, and accounts posing as Trump supporters, which goes back to the heart of the issue and the original problem in 2016. Clearly this is still happening. Does Facebook really have it under control?
Well, other entities, even domestic entities, have learned from Russia's tactics in 2016. They're very effective. All you have to do is establish some level of trust in a community, and then you can start to feed that community information in whatever direction you want, or just stir chaos should you wish to stir chaos. And I think, I was on the call today with Facebook talking about this removal. The company is saying that this is just the problems that they're taking down. They keep coming back, and a lot of the new things that they're finding, a lot of the new networks of coordinated inauthentic behavior are linked to networks that they took down previously and are trying to check whether they've resurfaced. And so certainly they have resurfaced, and a lot of times it's just a matter of finding that new network, finding the new strategy, staying one step ahead. But I think it's going to be quite difficult, because when it comes to domestic misinformation, you risk that bias we're talking about. You risk that perception of illegitimacy on the platform if you deal with something that's opinion. So I think that they haven't figured it out, and they're going to have to keep changing their tactics to address not just what happened in 2016, but what's new this November in 2020. We may not have seen the extent to which the problem has gotten out of hand yet.
All right, Bloomberg, Sarah Frier, again, now less than 3 months to the election, something that we will continue to report on. Thank you so much. Now, back to my wide-ranging interview with Bill Gates, co-chair of the Bill and Melinda Gates Foundation, of course, the co-founder of Microsoft. We talked about his outlook on the pandemic, the hundreds of millions of dollars the Gates Foundation is putting into vaccine development, where he thinks the most promising vaccines are. He also talked about some of the unintended consequences of this pandemic, including increasing inequality. I asked him, how can we continue to narrow the wealth gap? Is he open to a return to calls for a wealth tax? Take a listen to what he had to say.
We can have a more progressive tax system without killing the wonderful risk-taking entrepreneurialism in this country. You can't have tax systems that, in my personal opinion, go too far, but we're not at that limit, particularly for capital gains type income. So yes, governments, if they realize that money isn't free, which macroeconomic conditions are confusing some people about that, at least temporarily, we will need taxes to make up for the the resources, because this pandemic, even just within the country, whether it's low-income families, minority families, kids in the inner city, it sadly has exacerbated almost all the inequality in the society. If you're in a suburban school or private school, the online thing is actually not doing all that badly. Whereas if you're a young kid in the inner city, it's not accessible.
I'm not sure what's more terrifying, schools reopening or schools not reopening. I'm in a state where my schools aren't reopening. Should schools reopen right now? And if they don't, is that a year of lost learning?
We ought to be talking more about some age distinctions here. In places with the heavy epidemic, which sadly in the U.S. is a lot of places, high school and college are not going to get organized enough, and the disease transmission rate is much higher as you get up, past, say, 14 or 15. So, it's everybody's scrambling because this is all being done so much at the last minute, where some people, thought the cases wouldn't be raging at this point and didn't really help us think it through.
Well, and this shift to remote work and school is dramatically reshaping companies and families. And I wonder how you see that having a lasting impact on society.
Well, there are great things like telemedicine that people have been open-minded to because they've kind of been forced into it. And there's ways to shape that for lower cost and higher quality. The notion broadly of how many office workers need to go into the office, which weeks, which days, how many hours, that's going to get a really big rethink business by business. And, you might reduce the total commercial space needed pretty dramatically and take some pressure off of these inner city cores where the rents and traffic are very problematic. And so, we're not going to do as much business travel, I don't think, because people have been forced to learn Zoom and Teams, and the R&D on those things is going to make them way better, even just a year from now than they are right now.
I've been following how Melinda has been talking about the impact this is having on women and families. She's been very outspoken about how you and her have navigated work-family life. And I'm curious how you're navigating this time. There's this feeling in the home of whose job is more important, mom's or dad's. How do you answer that question?
Well, I'm very good at doing the dishes. I'm not as good at preparing the food. So hopefully some specialization kicks in there. Our kids are older, so we're really lucky. We've actually gotten more time with them than we would have under normal circumstances. And obviously, we have a lot of room in our house and a great internet connection. So, our case is atypically nice, and I've tried to make sure it's not loading her, but I think it's great she's speaking out, because if you're a single parent, if you're in a small space, this is a hugely difficult thing, and it's even hard to measure how tough it's been for those without what we're lucky to have.
More of my conversation with Microsoft co-founder Bill Gates. You can catch much more of that at Bloomberg.com. All right, coming up, we are going to bring you back that TikTok story. Is Microsoft considering buying all of TikTok's operations, not just operations in the United States? We'll have Kurt Wagner with us next. Back now to that Financial Times report that Microsoft is pursuing not just TikTok's U.S. operations, but looking for a deal to buy all of TikTok's global business. I want to bring back Bloomberg Tech's Kurt Wagner. Kurt, we heard you talking about how your sources actually pushed back on this report. What exactly did they tell you?
Yeah, we were told that the plan is still the same plan that Microsoft had shared over the weekend, which was that The two sides are in discussions to take the U.S. operations of TikTok in addition to the operations in Australia, Canada, and New Zealand and sell those to Microsoft. I can understand why there might be some interest in getting all of TikTok because I think it would make it an easier acquisition so you're not necessarily breaking up the product in the way that they would have to otherwise. But we, again, are told that the plan is still what Microsoft had announced over the weekend and that it's going to be limited to those 4 countries as of right now.
Right. I still don't understand how they would break up the business and how that could make sense when this is a global app.
It's very confusing, and I don't know yet either. And I think that's probably going to be one of the most challenging parts of getting a deal is figuring all of that stuff out. I mean, you even look at the management. I was thinking about this morning. Kevin Mayer just joined to be the global CEO of TikTok from Disney. He's also the COO of ByteDance, the parent company. So if, TikTok spins off its U.S. business, what does Kevin Mayer do? Does he go with the U.S. version of TikTok and potentially go to Microsoft? Does he stay with ByteDance and continue to run TikTok in other countries that aren't the U.S.? There is a lot of confusing parts to this that are going to have to be figured out if a deal is going to get done in time, which, again, the president has said needs to be done by middle of next month, September 15th.
Do you have any sense of whether there are any other interested suitors here? I know many of the big tech companies are under antitrust scrutiny, and perhaps now wouldn't be the time to pursue a deal with TikTok. But does it seem that Microsoft's the only one in the running?
We had a story a few days ago that there were other interested parties. What we have not been able to confirm is exactly who those are. We've seen a few reports come out since then. One said that Apple was interested. Apple quickly jumped in to deny that. I think there was one yesterday or the day before that Verizon was a potential suitor. You may recall Verizon, I think, was being tossed around as a potential acquirer of Twitter a couple years ago. So there's been big kind of tech and telecom names mentioned, but no one has come out certainly and said publicly that they are interested. I would be shocked if a property like TikTok goes on sale in such a public way and they're not fielding phone calls from a lot of people. The challenge is that it's very expensive, and most of the people who can afford it were those companies that were at that antitrust hearing a couple days ago. So it's going to have a limited group of people who can actually afford this and probably get a deal through regulation.
All right, Kurt Wagner continuing to chase that story for us. Thank you so much, Kurt, for that update. Coming up, we're going to talk to the CEO of T-Mobile. T-Mobile just slid into the #2 spot among wireless service providers in the United States. What's next? We'll ask Mike Sievert coming up. This is Bloomberg. T-Mobile out with earnings after the bell that beat estimates. T-Mobile now the #2 mobile carrier in the United States. Shares up still 5.5%. After hours, joining us to discuss what's next, T-Mobile CEO Mike Sievert. Mike, thank you so much for joining us. So big milestone, especially in your first 4 months as CEO. I'm sure this is a fun way to celebrate. Talk to us a little bit about how COVID is driving business in the pandemic and what trends you are seeing.
It is. It's a celebration day. It's a historic day for our company. When we started this Un-carrier journey, we were #4. And today we announced that we have overtaken AT&T as the #2 provider. And not just because of the merger. Inside this quarter, during the COVID pandemic, as you mentioned, we delivered 1.2 million new customers, more than 3 times AT&T and Verizon combined. And to your point, what customers are looking for right now is not to have to trade off value and network. They want both. They need that connection right now more than ever, and they need it at a great deal. And that's what the new T-Mobile is uniquely positioned to provide.
So are you on track with network expansion despite the challenges that the pandemic has posed in other areas?
Well, the network is being built at pace. We haven't slowed down one bit. We've got our full stack now, including that 2.5 gigahertz mid-band spectrum that allows customers to have 8 times the speed of LTE, 300 megabits per second. We've got it in the major cities across the country now. New York, LA, Chicago, Houston, Philadelphia, and we will be in thousands of cities as we exit this year. Not a few places around the country. We have 50 times more coverage than Verizon on 5G and twice the coverage of AT&T with transformational customer experience. And all of that's even in advance of people having handsets. And so it's just extraordinary. I look back 10 years, and Verizon really got out in front in 4G LTE, and they dictated a lot of the terms of network competition for the 4G decade. The opportunity to lead in the 5G era, it's T-Mobile's.
Do you think this is the year that 5G is really going to break through with mainstream customers?
I do. Carriers have been talking about it for a long time to each other. But consumers will start to care in a big way this year. And two reasons for that. One is I certainly hope that all the handsets will be there, and that's important as a catalyst. But two, it's becoming crystal clear, and parts of this will outlive COVID, that connection, that essential connection that we all have in our smartphone, it has to be a great connection. And that's what 5G will be able to deliver.
Now, let's talk about the merger with Sprint. Are you also on track to meet merger commitments? Is the pandemic at all hurting the integration in any way?
It's really not. The long pole in the tent has been permitting, which we did all that work before the merger, or a great deal of it. And so we've been able to come right out of the gates and build. And, that's been terrific. I mean, as I said, our 2.5 gigahertz 5G is rolling out in so many places around the country, and it's providing this transformational experience. We are way ahead on things like marketing integration and our retail store rationalization, some of our back office organizational work, as we disclosed with the costs coming forward of some of that integration. And that's really great because it gives us the potential to get to run rate synergies faster. And my goal is to have the synergy production from this company be bigger and to come sooner than we promised.
Now, on another note, tensions between the U.S. and China are at an all-time high. Of course, Huawei has been a flashpoint there. And given how prominent their equipment is around the world, I'm curious what your position is on this. Is the U.S. taking the right tact?
Well, look, we've been on the sidelines of this because our big strategic partners for our network are Ericsson and Nokia. We have big strategic partnerships with companies like Samsung and Apple. And so, these are companies that are Western and some are American companies. And so, we've been on the sidelines on this issue. But I'll tell you, our partners are investing with us, and we're doing things that are just breakthrough. Just this week, we announced we're the first company in the world to have a standalone 5G capability. That means your 5G is all the way into the core of our network, and it's not hindered by any legacy 4G technology on T-Mobile. We're the first company in the world to do that with our partners like Ericsson and Nokia.
So then what are your outlooks for the year, given that, many of us are still working from home, schools are still remote? How is that going to drive business and, pressure essentially on your networks over the next six to 12 months?
Yeah, we've seen some return to switching behavior and shopping behavior in the category, and that's really important. We've predicted that will continue to modestly increase through the rest of the year. But the bigger dynamic is what are consumers going to be looking for as this pandemic unfolds and the economic circumstances that follow from it unfold. We think they're going to be looking for a better value and a better network. And, budgets are tight and people are having to make choices, and they're not going to drop this category. Smartphones are so essential to our life more now than ever, but they may ask themselves if they have the right provider, and that's a big opportunity for the net share taker in our industry and undisputed growth leader, us.
So last question, many of the companies that make the phones that your customers use, Apple, Google, are in the middle of this big antitrust situation, lots of antitrust scrutiny. What is T-Mobile's position on that? Are these companies too powerful? We've got about 30 seconds.
Yeah, our focus is just to serve customers, and they've served us very well. And so I'm not an expert on that issue, I can just tell you that with our partners like Samsung and Apple in the handset space and many others, and with our network partners, we're delivering an incredible service. And that's ultimately how the customer wins. And so I'm a big fan of the tech sector, and I hope that America continues to lead in the tech sector.
All right, Mike Sievert, CEO of T-Mobile. Mike, always good to have you here on the show. Thank you so much for stopping by. And that does it for this edition of Bloomberg Technology. Stay tuned for Bloomberg Daybreak Australia next. I'm Emily Chang. This is Bloomberg.